Well, good morning, everybody. Welcome. Welcome to the Hawkeye Morning Trade Lab. I'm Brian White with TraideMasters. I've got Deb here to help me along, and I'm filling in, or we're filling in for Al this week. And so he's off traveling the world, doing what he's supposed to do. But for those joining us for the first time, we're definitely glad that you are here. Again, Hawkeye is not a hype room, and it is not going to be any sort of blind signal or alert room. This session is going to be about learning how to slow the market down, read the conditions, kind of figure out the market weather, and only consider the trades that actually qualify. So the big idea, let me get the screen off so we can get started here and get to where we need to go. I'm going to just minimize that. Let me bring up our radar screen. And so you guys just know today has a lot of market moving information, just kind of like we did yesterday. It's packed in a very, very short window. So this again is kind of the morning where the discipline part really, really matters. As you can see, I'm in two trades, two losing trades, but I'm not too worried yet. We'll look at those here in a moment. But it looks to be shaping up very, very similar to what happened yesterday. So I want to say this very, very early that every morning does not need a trade. I'll put it on here for education purposes, but on your real life, you may not need to be trading every day. If the market does not allow you to trade, then you definitely want to be able to you definitely want to be able to walk away. So some mornings are trade mornings, some mornings are training type situations. Today may be a mixture of both, but it looks like it's going to be a teaching day. Again, every morning does not need a trade. You still want to be waiting for the right setup, and waiting is even a trading skill. So be aware of that. So we've got our radar screen. We trade up to 12 pairs. We watch about 8 at one time. So a quick reminder before we look at anything else, everything we do here is for education purposes. We're not going to give you any sort of financial advice, and we're not going to tell anyone what to buy or sell. Each trader is going to be responsible for their own decisions. You understand your own risk and you understand your own account. Our job this morning is not to predict what the ECB might do. It's not to guess what a PPI number might come out to be. Our job is just to ask better questions. So questions that like, is the market clear this morning? Which it's really not. Is the Hercules confirming our momentum? Is price near a danger zone or opposition? Do we have room to a target? Are we trading the plan or trading on emotion? Those are the good questions we want to make sure that we're asking ourselves. And the mindset alone can save you a lot of emotional headaches. So let's go over quickly to our Forex factory. And I want to look at the full calendar. Let me see if I can pull that up like that. Yesterday, again, you can see yesterday and today. And let's start with the calendar because today the calendar will be the story. We have the ECB press conference for Euro at 7:15 Central Time. I'm talking on my time here. So we got about an hour and a half, not quite an hour and a half, and including the main refinancing rate, the monetary policy statement. And then we have the US PPI, core PPI, and unemployment claims at 7:30. So, and then we have an ECB conference and a press conference coming out. So this is a pretty tight news window. So it's going to affect the euro pairs. It's going to affect the US dollar pairs, gold, and the Dixie, which is the dollar, and overall sentiment. We saw yesterday when the news came out, gold spiked, but immediately after a period of time, it repostured back to where it was before. Again, we have those geopolitical pressures that are going on as well. So Our news posture today is pretty simple. Respect the calendar. Don't force a trade into red folder news. We're going to take that 15 minutes before, 15 minutes after approach today. And we're going to wait for that market to settle out. We're going to record about an hour of our session today and see what happens in that hour, get some learning done. Just know that a chart can look pretty useful before the release and completely invalid 2 minutes later. So that is why we don't want to build the morning around just guessing. So just something to take away, when the calendar is louder than your charts, then probably a good day to be professional about it and use your patience and not force anything at all. So jumping back to our charts, we're still sitting in no man's land. Our numbers are great. We should be short, and we are. 7.3 is a 4. It's been high. 7.0. This is just a pullback. I just don't know if we're going to have enough time. So as we build our morning up, we always like to take the first 15, 20 minutes to really build the market weather up. I am going to take a look at the Dixie, which is DXY. And I'm going to blow it up for you guys on a bigger time frame. This is the daily. And you can see we're range bound. What does this tell us for our weather? So the dollar is the weather report. It definitely is going to impact many pairs that we trade. And so when we look at this, we can easily see we're coming up into a Sherlock zone institutional type movement. Again, if you're new, pause the video. If you're watching later, learn what Sherlock is. Those are institutional key price points, but always look left. And you can see there's a line of control right here where we've been since May, I would call it. On the daily chart, we can squish and squash and realize basically we've been in a downtrend, and you can see that through Sherlock, downtrend into sideways. Very, very clear sideways motion. We have had recent support and recently trying to trend up, but it's going to be a beast to get through, especially during the current geopolitical things that we're having. Looking at the 4-hour chart, we break it down a little bit more. We can still see that we're range bound. I like to squish and squash, get about 300 candles in there, kind of give you a good picture of what we're dealing with here. Not a lot of room. So on that 4-hour, that's the big picture here. And as we get closer to our day trading time frames, we want to pay a little bit more attention. Again, we squish and squash. We do have a 1-hour uptrend, even though it's not a great one. The Dixie is kind of pushing back towards the 100 area, which is a nice whole area, but it's going into overhead structure, which means supply or resistance, however you want to talk about it. So the dollar does have some strength, but it's also very near a critical decision zone. Let's dump into the 15 minutes and see what we got. Again, we see some pictures. And again, I want to show you Tide Fusion's on here. Again, be very, very clear. Tide Fusion was not built for the 15-minute chart. Tide Fusion was built for the 4-hour swing trading. Al just happens to use it on his charts and found some magical ways to employ it with some different numbers that he uses. So I'm using the default, so it's going to be a little bit different than what Al does, but it still gives us the picture that we want to see. On the 15-minute chart, we are trying to press higher, but it's still sitting near a pivot high. And before we have any and this is happening before we have the USD news. So that tells me we're not going to assume continuation before the market actually will confirm it. So we can't really jump into it. Now, I did for education purposes and to watch, have something to look at. But if the Dixie happens to break higher, and this is why it's important, and if you want to take notes, this is a great place to pause and take notes. If the Dixie happens to break higher after the PPI numbers and the news, and it holds, that could support that US yen, US CAD buy opportunity and pressure the Euro US, the Pound US, and the Oz US and gold downward. So if it rejects that area and it starts to roll over back, it's going to have the opposite effect. So again, the message for today is the dollar is trying to firm, but the event hasn't really spoken out yet. So don't trade the dollar story because the dollar actually tells the truth. It's not really a story, so be very, very careful with that. We like to look at gold. Let's jump on the daily for gold first. Squish and squash. and that tells you about everything. We had some fantastic movements since 2024. Build that out a little bit more, getting a little bit more relevant. We've had uptrend, 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 and then we got to that February market. We know what happened in February. We started talking war, oil started changing, dollar started getting strong, gold started getting weak, and it's just been kind of teetering down. So when we look at gold on a 4-hour chart, that's the day. Let me get you to the 4-hour. You can see just using Sherlock what the trend is. Just seeing the colors tells you what the trend is. Looking back to the left tells you where we're at. So gold is giving us one of the kind of clearer market messages. It has been under strong pressure. And on the 1 hour and the 15-minute chart, the short-term trend is clearly very, very weak. We did see a momentary spike yesterday, but here's the caution. Gold is also pushing into a large support area, floor zones, if you want to call it. And that means we need to move with caution. That is a 4-hour chart. Looking at our 1 hour, you can see we've got a demand area there. We're in a position that's kind of risky. So gold is not the chart you really want to be chasing after. You want to use the chart for context. It tells us really that the dollar strength and risk pressure have mattered, but that PPI causes, if it happens to cause the dollar to reverse, then gold can again snap back very, very hard, very, very quickly. So this is one of those good teaching moments for gold. Clear direction does not automatically mean a clean entry, because there's really not one. So when price is extended like it is into the floor before major news, you're going to hear this a lot. Patience and discipline, and patience is protecting that capital. Let's go back, and that's our normal stuff. Let's go back to our 15-minute chart radar screen with our all 8 pairs. Kind of clean it up here. And let's do a quick look overall at our numbers. We've got a 5 spread on Hercules. 1, 2, 3, 3, 4, 6, and 1. So we're in 2 trades. And this is the question. This is what we saw yesterday. This is not Hercules freaking out. This is not Hercules doing wrong. What's happening here is a natural process of a market. We've got a 6 spread. That's telling us we should be moving up. And the question you should be asking is, what might be causing this to move down at the current, even though we're showing strength? And there's a couple of things. Number one, we're ahead of news items. There's probably not a whole lot of volume going on to support this 7-1 spread at this particular time. People are sitting on the sidelines. London is kind of in its back end of its time. Aussie's definitely almost done. And so you've got a lot of market things going on right here that's just not supporting the 7-1 spread. That's it. Does that mean it's going to continue down? No. One or two things is going to happen. Or three things. Excuse me. 3 things. It's going to do nothing for the next hour like we did yesterday. Number 2, it's going to continue downward and it's going to stop us out. Number 3, it's going to take this spot. You can see this rally, base rally, short rally here, come back, retest, which is a great place to get in, and it's going to rebound up and support the 7-1. We don't know. So what are we looking at when we're looking at our US CAD? We are, and I'm jumping a little bit ahead. I wanted to cover the US yen and the pound yen, but I want to get you guys thinking about the trade here of what we did. First and foremost, we had a breakout and it came back. We took the breakout move on the candle. We entered it on a breakout. That was the breakout strategy. There is no tide fusion alert. There is nothing like that. Okay. There's no sentinel alert. This is a breakout strategy. So we played the breakout strategy based on our Hercules being at that time a 7-0. Okay. It was a 7-0. And then it went immediately to 7-1. It's been at 7-1 for a while. We noticed it just kind of tickered down just for a moment. So I'm not worried about this. We've followed our rules. We followed our guys. We had our strategy. We put our stop in place. Our stop is 14 pips away. Our target is 17.5 pips away. Our yellow line represents the 10 pip mark. And as we mentioned yesterday in our trade plan, if the price happens to come up and even touch this line, we're going to immediately remove 25% of our position, move our stop to 7 pips above entry, and leave the and let it be. Okay. And that's where we are on this trade. So at this time, there's no reason to stare at it. It's not going to do anything. We got a long ways to go before we're going to actually hit our 10. But we found that over 60% of the time, when using the strategies that we used, we're going to hit the 10 pip mark. So that's a good number to keep in mind. So let's dive into just the US yen, because that's going to be a primary watch today. Let me move this over here. And I don't want to belabor too long because I definitely know you guys want to get into charts and charts and charts. This is the 4 hour. And again, we can see we're at a critical, very critical spot. We mentioned that. Okay. So when we're looking at the US yen, it has the cleanest structure on the board. I mean, it really does. On the 4 hour and 1 hour chart, it's very, very clear to see that the US yen has been trending higher and it's pressing into that new major overhead or supply area. And on that 15-minute chart, we can see, let me blow this up again so you guys can see. On that 15-minute chart, price is active, but it's sitting near an upper part of a move. And you can see we're kind of getting close to that weekly, monthly ceiling is what we call it. So yes, the US yen belongs on the radar, but I would definitely not call this an automatic trade. It is high. It is near a ceiling, and we have major US news coming. So what would make this a little bit more interesting would be a clean post-news breakout above that nearby ceiling, or a very controlled pullback into the structure, I would say down in this area. That would give, and pull back where Hercules gives us still the required spread. Right now, this is not giving us any spread at all. We need to definitely make sure that we have room to our target. So what I do not want is to buy just because it's going green and having that push. Strength at a ceiling is definitely not the same thing as a qualified trade. So remember that. Now let's jump into quickly into our pound yen. We did get a sell signal on Tide Fusion with this right here, and we're in a pullback zone. We're at 3 though, but notice the bottom. Let's jump into a little bit higher so we can see the big picture here first. So I don't want to go too much further than the 4 hour chart. You can see we are pretty much kind of a sideways with a bias up, but we're inside of a supply, coming out of supply into a demand. Our ribbons are kind of pointing up, green. Our dotted line is green, but it's not really up. So here's what we take from this. This is a useful teaching chart. It shows exactly why location matters. So there is some movement. We only have a 1 spread, but price is also working against that overhead zone, that supply, and our stop pivot area is very, very tight. So let me jump down to the 1 hour, see if it looks any different. And you can see we're still very tight. Great teaching moment. We can see our area yesterday. We had our buy. It would have worked out. It did work out. You can see where we got in and got out. And then let's see what we got to the 15-minute here. Blowing this up. Man, oh man, I don't like the sell right here, too close to the bottom. So on the 15-minute chart, it does show pushes and reversals, but it's not clean enough really to chase. The 1 and 4 hour definitely brings the context and also shows that we're not sitting really in that open air that we're looking for. So for this to become interesting, really, definitely we need a clean pullback, maybe even a deeper pullback than we currently are, and we need to make sure that we have that Hercules confirmation, clean, maybe even a clean break above all that mess. But we have to have room to continue. So until then, this is really just a watch chart and definitely not a force chart. Again, movement's not enough. Location and confirmation definitely do matter. Now, let's jump back into the one that seems to be doing the opposite of what we'd expect. We quickly touched on it, but let's watch and see what we got here. And now we're into our trading time, our true, we're not done completely with our watch list, but we're now in that 15, 20 minutes where we definitely want to be keeping our eyes on the radar. And we've already kind of got into a trade. I wouldn't recommend. I've been up since 3:30 this morning, so this was not just a haphazard trade to get on for education completely. I waited a little bit for it, waited for that pullback as I was watching it. So let's talk about the US CAD overview. Then we'll jump into the Euro US and Euro Yen if we need to. So US CAD matters because obviously it's going to be tied to the dollar strength. But as we can see in our larger picture, this is sitting near kind of a ceiling type structure. If the dollar does confirm higher PPI, then the US CAD would definitely be important. I don't want to chase it into that resistance part though. We do have room on the 15-minute, but I would really want to be concerned with the 1 hour, and really aren't seeing anything other than a 4 hour. Now I could loosen up the Sherlock a little bit to get a little bit more clean, but I really like looking at big picture on this for the 1 hour and noticing that a really good entry. And I would say that we did a breakout, but if I was doing a pullback, I would actually wait for this one right here on a 1 hour. It's fantastic. Rally base rally, looking left. This is where the control place was, where it was once resistance. You'll hear, we talk about vocabulary and terminology. What was once resistance becomes support. That's a good area. I would not be shocked if it comes down here at all. Again, we can't make predictions. We've got a lot of things still in our favor on the 15-minute. I don't particularly like our stop because we're really not encompassing this other wonderful Sherlock zone, but it doesn't mean it won't work still. So US CAD is going to definitely be impacted, and we definitely don't want to chase it. So let's, as we're walking away, still 7-1 and real no movement. And that concerns me because that usually means bad news when you get to the news time. Let's look at that Euro Yen. I see a sell signal on Tide Fusion. These are very wishing. Again, Tide Fusion, the numbers I'm using is default. It's not geared to this. I want you to notice the Euro Yen though. These are mattering because that ECB is coming out. It's a major event. These are the Euro Yen and the Euro US is not the pairs I want to prejudge before that rate decision or any sort of statement. Notice what it's doing. It's been going downward, and then we're getting closer, and people are either getting out, taking profit, or getting stopped out. But we're at a critical level on a level with Sherlock. Okay. Now, in our series on YouTube, we talk about recognizing things without any help. We call it naked trading, and we can turn this off too. And let's just look at this. This is what you should be able to do before you trade real money. Now we're looking on a 15-minute chart. What I would be doing here, again, this is a teaching moment. Pause it if you need it. I would be taking a line. That's not what I wanted to do. I want to create a line. Extend the line just here. No, that's not what I want. I want a horizontal. There we go. Now, what I want to do with this horizontal line is pull it down to where most of our candles are touching. Notice we got nice here, 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 here. That's on the top side. Now, this is what I used to do in my trading when I was failing and I needed to find my way. And I do the same thing on the bottom. This helps me look left. It tells me where we are in the picture. It tells me which direction I want to be. I really don't want to be long. I'm closer to the middle point here. And this is why it's important. If I go over to the 1 hour and these points in time make sense. Notice back here even for this bottom. Did we have a break? Yeah, we broke, came back, tried to retest it, broke down. And look where we hesitated on that candle. We had a wick bounce, then it broke, came back, retested. and then it jumped up and been retesting again, all the way back, test it again, test it again. Can we predict where it's going to go? No. My guess is we're going to go upward to this area until it breaks. And this is a perfect example of what you want to be doing without having any noise on your screen. And then you bring in your tools to help guide you along the way. I'm going to jump back to my 15-minute. I am at 2. There's no direction here. This is giving me some context of momentum. Sherlock is now going to give me context of location. Where's institutional pricing? Notice our green line is dead center. Notice our green line is here. We could have put more lines inside of here if we wanted to, but these are the extremes. A fantastic thing to know. Now, if you've been with me any length of time, I would normally pull a Fibonacci all the way from top to bottom, and these would fall at the 50, and this would fall at the 61, 70 area. So which one would I go with? It depends on what Hercules is telling me. At this point, I don't want to go with either. And then I bring in Tide Fusion to give me some visuals again of where we're at. Okay? That's how we use all the tools in context. I would do nothing. That's to sum it up, I would do nothing with this pair. And we should be able to do that with any pair. Turn off the noise and make our decision. So we're going to close these off. This is the Euro US. I don't want you seeing anything. This is the simple part. We squish and squash. You should be able to get about 300 candles in. Look at the candles. We can see that we are definitely range bound. It's not even as pretty as the Euro Yen. I would say this is going to be your area, looking all the way back to there for your top side, even though we have some breakage. And this one's even stickier. It gets even tighter. I like this one better than I like that. So I'm going to, and again, the most recent price is always the strongest. So keep that in mind as well. So we've got our range. Where are we at? Similar to Euro Yen. There's nothing that's really going to give me anything to freak out. Bring it in Hercules to give me strength. We've got a 3. If I want to be doing something, I want to go to the downside. But again, I don't have the context to do so. Bring in your Sherlock. This tells you everything. You are sitting on levels. You don't have room to your target. Move on. Don't force the trade. Don't chase it. We had a level on a level. If we were paying attention, this backside might have given us enough room to get here. But this is sizable. Notice that our line before ever seeing Sherlock is dead on to where our Sherlock is at, and same thing. If your line happens to not fall inside of a Sherlock, it does not mean it's not valuable. Again, look at our hour chart. This is the one I would be paying attention to. But again, it doesn't mean it's not valuable. So we've marked our chart. We bring our Tide Fusion in. I already know what it's going to be doing. We're sitting here, but we're sitting tight. This sell signal would not be a verified sell. Now, understand, when we got that sell signal, it looked like that. But what did we see about this? We see that we got a sell signal right inside of demand. So it would nullify the trade. You could take it. The trend is strong, overall strong, waiting for your Hercules to fit. But right now it doesn't fit. It was a 7.3, it was 4. We're looking for a 5. So again, that's how we trade that. Now, bringing us back to our 8 pairs. Let me get them so we can see what we got. Got this sell signal sitting here. We're still losing money on a 7.1 and a 7.3. It's just crazy. I just think it's going to be one of those days where we sit again. So let's look over our trade rules again, just to make sure that you guys understand the Hawkeye trade rules, especially for those who came in late. Hawkeye does not qualify because we lack a direction. It qualifies because the plan says so. So before a trade can be even considered, we need to make sure we have clean structure, Hercules confirmation, room to the target, no major Sherlock level, no pivot, not too close to pivot. Now, our rules do say fair value gap, but you'll notice I don't have that on my screen. Al uses that. Support and resistance directly not in the way. We need to make sure that for Hawkeye, the Hercules is a 5 or more. Remember, on our plan, it does say potentially 4. I would use 4 if you're experienced, but not anything less than 4. So if that spread is not there, we walk away. So when we quickly scan our radar, we see a 5, which would qualify us to go short, but we're already in the short, so they kind of correlate. This is going to be a stronger pair, strangely enough, because the pound is a larger player than the Aussie. We are at a 1, a 2, a 3, a 3, a 4, a 6, and a 1. So we can quickly look at Hercules to give us our current momentum on the 15-minute chart. And remember, the management structure: 14 pip hard stop, 17.5 full target. When we touch that 10 pip mark on profit size, we close 25% and move the remaining stop to a +7. And those rules matters most definitely on news days, because the emotion is going to spike quickly. 15 minutes before our news item, we will close these trades off, regardless if they're profitable or not, because we anticipate chaos like we did yesterday. And we've learned our lesson. We don't need to chase anything. The trade is not qualified because we want it. It needs to be qualified because the plan says it is. So our posture for today, again, be alert, patience, kind of boring, which is what you want. We did not have any overnight signals really to review. We did not have any clean broad market standout pair. And we do have that major news risk. So dollars pressing into a decision area, as we mentioned. Gold is weak, but it's extended into support. The US yen has the structure, but it's near the top. Pound yen is active, but it's definitely not clean enough to chase. Euro pairs are tied to the ECB. So you can see so many reasons to sit on our hands. So the big idea: event risk is first, and confirmation second, trade last. But we will watch these other pairs as we sit. If the market gives us a clean post-news setup and we're still here, then we will evaluate at that time and using our plan still. If it does not, then no trade. And that is still a professional outcome, by the way, especially day trading. A reminder: day trading, be very, very careful. Most of the people in day trading have a mindset, even if they don't want to admit it: I need to make money and I need to make it fast. That is definitely why 93% to 95% of day traders lose money. And most likely, if you're failing at day trading, it's because you have that mindset. You're not following a plan. You're not disciplined enough. Maybe it doesn't fit your personality. Again, I would tell you to start here on the YouTube channel. Go through the first 2, but definitely the road one, which I believe is the 3rd one. And that definitely will explain that you may not fit a day trading. I am not naturally a day trader. I am naturally and calmly a swing trader. I like to set a trade, forget it, walk away, go play golf, and come back and see what happens. I'm not a tinkerer. I don't like to tinker with trades. If it's good enough to get in at the time that I'm going to get in, it's good enough to lose. And that's kind of my philosophy. So, and just know that doing nothing today is not failure. I've heard that so many times. Doing nothing when the setup is not qualified is just dumb. You need to make sure it's qualified before you set it up. So we've moved to our live charts. Again, our job is not to predict the news, just respond. So, and knowing that we do not have any sort of real confirmation. So event risk first, confirmation second, and trade last. That's kind of our phrase today. And we definitely don't want to over focus on one particular trade. We want to stay honest. If it qualifies, then say that clearly. But if it doesn't, say the same. And again, we're gonna avoid giving you any sort of advice language like I'm watching this. These are all on demo. I am not trading live today, so We definitely want to be educational in this. So we sit and we wait. Again, we'll let this video run for about an hour, and then we will pause it. And if it merits to come back and record the news, we will. Otherwise, we just do what we've done. And again, our rules per our trade plan says if I lose these two trades, I'm done for the day, whether I want to be or not. And so there's confirmation if we get tapped out. And we very well could get tapped out. But again, I'm not exactly sure why. I need to actually increase my position size because I'm only risking about $2.50 on these trades, and it should be $25, not $2.50. That is so minute. If I'm reading my numbers right, 10% would be 223 approximately. So that means I should be risking 22. But this is education. So on my real platform, I'm going to make sure that that's correct. I don't trade off of TradingView anyway. Okay, I had a question overnight from a trader asking about the new broker information. I haven't put that out yet. My goal is to have it out potentially by the end of the week. So if you're interested in using the new broker with us, again, it's not required. You're more than willing. We'll send a team link out, and it's really no different. It's an overseas broker again, and this is to help kind of level the playing field for our U.S. Traders who are at a disadvantage when it comes to leverage and being on both sides of the trade. If you're kind of hedging, we don't do a lot of hedging, and I don't even deal much with our margins. So even the leverage piece I don't really infringe on that very often. But I do like the fact that we know the ownership of the broker. That kind of helps. Again, brokers are brokers. The key is tight spreads and getting some good help. Okay, notice our Canadian dollar went to 0, but our United States dollar went to 5. So we're still staying in that 5 realm. Thankful that the Canadian dollar got weaker, but I would have loved to seen the dollar stay strong. So right now when we're looking at Hercules, and I'm not even looking at structure at this point, I'm actually looking as I do the radar, and I could bring some other pairs in here if I wanted to do so, knowing that the yen is a 6. I'm guessing the Kiwi once again is number 7. Knowing that the Canadian dollar is 0, I could bring in some extra pairs in here if I wanted to. But again, these are our major 8s. And so I'm not going to chase it before news, to be honest. But I can quickly scan my Hercules and determine I got a 2, a 2, a 2, a 1, a 4, a 3, a 5, and a 1. So we've got a lot of nothing. And so we sit. And this is why I placed a little bit of music in the background for us today. While we don't have many in the room, we are thankful for those who are watching the videos for hours. That just tells me our time zone may not be, or your work schedule doesn't allow you to be in the morning. That's fantastic. Again, if you're one of those people, it's great that you're watching. And the Asian session with rules can be a good session to play with in the evening times as well. I would say around 9 p.m. Central is a great time to start. Again, I don't trade that because the volume's not near as reliable, but it is an option for you. But I would also encourage you to go to our Start Here series on YouTube and definitely check out video 3 about lanes, because that sometimes is a play. We asked some tough questions there, but it is questions that you need to know about yourself. So we're back to 6-0. And notice we're still just kind of hanging. Now, I will bring up the US CAB as a learning um, option here as we're sitting and watching, because there's really not anything to watch but this. Um, Please understand you are, and again, we mentioned this yesterday. TraideMasters was formed. We used to be named something else. I can't even remember. It's been so long. But we decided to put AI in the middle of our name. We didn't really know why. I think there was somebody else that actually had TraideMasters spelled correctly, to be honest. So we took AI. And little did we know what God had planned. And so it really is formidable in this last number of years how many people are trading with automated system using AI. It's dangerous because AI cannot still predict the future. It can only help you recognize patterns um, and make you hopefully a better trader because of your own personal weaknesses. So knowing that is a self-fulfilling prophecy. So for instance, if we know that 75% of people are using Fibonacci and particular Fibonacci numbers, then when a particular price point hits that Fibonacci number, we would anticipate some sort of reaction, whether it be a hesitation for a period of time, a breakout, or an extended move. It doesn't matter. It's a self-fulfilling prophecy. And I don't know how many people I've heard say, well, I just use the 200 moving average and the 50 moving average, and when they cross, I enter on whatever side, and that's being successful for me. Okay, if it's successful, great. But and that those are very, very vital numbers, especially on higher time frames, very key numbers. Um, but they are also self-fulfilling prophecy that don't necessarily determine if the movement is real or not. So let me give you an example. If I were to move this like this, and we moved, and we were just sitting sideways, we have the red ribbon. Now, red ribbon is constructed of a number of moving averages calculated together, embedded, and doing an analytical move inside the programming. Okay. The red line is not a moving average, although it looks like it's visually that. It's some other calculations that help Tide Fusion be a strong contender. Now notice when we come to this area right here, Hercules is telling us what it was. But if we were to come in, this was green right here, turned red. If we were to come in at this cross, this didn't even cross, this is the cross, and just blindly take a trade short, it would have worked out. But look at the headache we would have had to go through for a while to get through that, not knowing the uncertainty. And where do you put your stop? No clarity there. Or we may be waiting for our ribbon to turn red, and at the first closing of a red dot, we get in. Again, that's a little bit, but notice how flat the ribbons are. There was nothing telling you it was going to break down. It did, and it did nicely. But when we look at these things, predicting the future is easy. Well, I would have done this and I would have done that. Okay, so now we're into this look. Now we have this look where the ribbon actually turned green. You're telling me right here, oh yeah, I'd have gone long because it turned green. Okay, and let's continue. There's nothing telling me to go long. Not even here. I'm up against resistance. Now I've got a green dot. Are you telling me right now in this downtrend, you're going to go long without question? If your trade plan says to do so, then by all means do it. That's what your trade plan's for. But ours doesn't. We have to have a clear structure. We're coming up against a headwind here. We need a breakout or a pullback. And so we wait. There's a pullback potential. Now we've got an opportunity to get into the trade, and it's reacting. We still don't know what it's going to do because we can never predict the future. But if I was going to get in, I would be getting in down in this area on the pullback. That's where I would be getting in. Gives me a little bit more room to the top side. I still got headwind up here. And so I go in here, and now I'm at my headwind, and I'm feeling pretty good about myself because I'm positive in the trade. I may have already reached my 10. Let me measure out and see. If I got in, let's just say, I can't predict where I got in. I'm going to go halfway up. 10. I have to get up past the headwind right about here. Past the headwind to just reach our first target. And we just did. Okay, so at this point, I'm feeling pretty good. I moved my stop to my 7 pips, which is going to actually be just above the tweezers here. And I keep riding it up and I hit my 17 and a half. That would have been a nice trade. Back here, this actually had context. And that's what we're looking for. Now, your context may be different than my context. Now, you got a different decision. At the point that the ribbon crossed the dots, is that an entry point, which is right here on the next candle? Possibly. That is context for me because that is actually the breakout move. That is truly the one that broke out. So this would be the one that I would get on. Now, again, we'd have to measure our 10, and that's going to be up in here. We don't have as much headwind. We got some flat numbers here, but we've got a little bit of headwind here, but my 10 is going to be up in this area. Remember, I got on this candle. Oh, no. Oh, no. Pullback. And we solidify and waiter. It's just waiting. But notice how we're just kind of petering out. Now, our stop is going to be down in this area, 14 pips. I'm probably closer to that. So let's measure, see where our stop would have been. So I got in, say, mid candle here. So our stop is going to be below that line, okay? And so here we go. We still haven't reached our 10. Our 10 is going to be up in this area. But we are climbing up that ladder, which I really love to see when that ribbon and that the dotted line are supporting our trend. Now we're getting into no man's land. And there's a rule that we're considering that if price breaks both like that, go ahead and cut the losses. Now, remember, our stop is down here. We would cut our losses at this point. Notice our ribbon turned red, but our dot is green. It's still green. It's still green. It's still green. And we stalled out. Created a demand zone. Notice, remember, our stop was going to be down here, so we're still in this trade unless we had the rule that if it closes below. But notice what happened with our ribbon and our dot. We've got a different change now. Now we're waiting for that pullback. Or you're that person who says, okay, as soon as it turns red and a red dot, I'm going short. And here we go. Now I've got a crossing on this candle. This would not be bad, except we got headwind. That's not necessarily bad. It just means we need to be aware of it. So I'll be looking to possibly go short here, but notice we're just sideways. And we go sideways and we go sideways. And I'm not even looking at what time of day this is at this point. This could be a horrible, horrible time of day. And now we've got the break. We would have lost that trade at this point right there. And we just keep going. So that's what we're looking for. Now notice what Sherlock is doing. 7-1. So this tells me it's going to go up. And it does. And we keep going. And that's how we play the game. Hopefully that was helpful until we get to where we are. And it gives us the picture. What are we doing? We got a 5 and a 0 currently. It's coming, it's respecting our ribbon. Remember that ribbon is going to be self-fulfilling prophecy. The dot's not as much. These are other calculation pieces. But we've got a nice Sherlock. Our stop's not in a great spot. It really is not. And we're coming up in that 10, 15 minute news item time. Let's see if it's going to give us a clock on any of this stuff. Let's go to today's date. Got to remember today's date is 11. Got a lot of friends whose birthday it is today. Lots of friends' birthdays. Special friends I teach with. A lot of people I didn't even know. One of our PEAMS director from school, her birthday's as well. Big day today. And so we just sit and we lose our 58 cents or so. I hope that was helpful, kind of getting context and structure and how you need to know your rules. What is going to be your rule? Al definitely likes when the ribbon crosses. He would say, okay, the ribbon cross, I'm getting in. That's his breakout. Notice right here, he got in just as we talked, and that would have been your winning trade. Notice there's no tide fusion alert right here. There was no sentinel alert right here. Those are just confirmation pieces. Remember, alert is not an indication to get in now. It is only a time where you go pay attention to the spot. That's it. And we've got so many people who want a signal or alert to trade for them without thinking. That is just not smart. And personal experience, and I'm all for it. I have no problem taking the risk. I know nothing about gold, and several times I've been involved in a managed gold account, which we call a PAM, PAMM. The PAM was somewhat automated by the manager of that gold account. He had access to trade my money. He couldn't see my account, but I had my funds in his account. So whatever he made a trade, it would do the same. Now, I knew that he was semi-automatic. I knew he was still there, but his system was going to be automatic. Now, he was there to manage when market would go crazy, but if your system that you're using is not built for a change in the market, guess what's going to happen? You're going to blow up your account. So when we look at Sentinel, for instance, and Sentinel Strike Zone, love the program. It is not working right now. Why? But what's been happening since February? February, we started the Iran issues, and the market is not acting typical. Our AI system is going, uh-oh, this is not normal. This is not historical data. I'm going to have to remember how this works so I can make adjustments. But I need enough time to analyze and get data before I can make any sort of adjustment to the system. That's what it's doing. And we don't have enough data yet. So Sentinel was built on a nice, and we can look at, let's go to a daily chart to give you a 3-day chart even. And let's pull up 3-day charts. And let's go look at this right here. That is a nice trend. We can do a lot of damage inside of that with a Sentinel, with a Tide Fusion. This is a little whipsawish. Starting at the end of the year, it started turning, and then we had the war stuff. And this wasn't our best pair. Let's look at the US yen. Look at this. This is what Tide Fusion, look at all the trades we had. This is what Tide Fusion was built for, okay? This is what Sentinel was built for. It was to find, not that every market has to be a super trend, but there's clarity and structure within the overall market, and we haven't had that. So that is why any system is struggling at this point. They're all struggling. So let me make sure I've got all my pairs here and not too many. I can't remember what this was. I've got my Aussie US, I've got my Euro Pound, my Euro Yen, Euro US, Pound US, that's the one, Pound US, and US CAD, that's the one I'm missing, CAD. So that's why you can't always trust a particular trading system to be as correct as it might be under good market conditions. It doesn't mean the strategy or system's wrong. It just may mean that it doesn't fit that market. So when those things happen, put less weight on them. Doesn't mean ignore them. Use the context. Sentinel is still providing some good signals. You just have to know what you're looking for at this point. Whereas before, it was a little less time needy. Because the structures were already there. It was identifying exactly what you would want to already identify. And that's the beautiful thing about the time savvy trader with Tide Fusion. Yeah, we haven't had a whole lot of alerts because of what the context of the global economy, but it has kept us out of a ton of trades, being very efficient because it's definitely looking for structure. Tide Fusion's definitely looking for trend. And we're not talking a day trend. We're talking weeks trend. And that's why we're struggling, because we're not getting any week-long trends. We're lucky if we get a 2-day trend at this point. And that's all because of geopolitical pressures in oil. And we talk about that on Monday nights. So again, we're approaching the top of the hour. Those who are East Coast, I guess that makes it 8 o'clock. Central is almost the 7 o'clock hour, and we are in the same identical spot that we were at 5 o'clock my time. We haven't hardly budged at all. I don't think I've been positive on either one of these trades since we opened them. But we followed our rules. We followed our guidelines. We are seeing that the U.S. is starting to move around a little bit. dropping from the six to the five. Um, so it's an amazing day to be a trader. These days are where a community comes in and um, brightens up your day. I need to make sure we're going to follow our rules today with the news. I think it said, what time did it say? 7:15. So in 15 minutes, I got to get out of any euro type trade. I don't think I'm going to get out of the US CAD um, or the pound since it's tied to US. But if I was any of these, I would. I'm going to be interested to see. Pound is really, it's not, well, I can't say it's not tied to the euro. It's not as tight as it used to be when it unpegged. So um, I think I'm going to watch this one. I think I'm willing to take that $2.45 loss. I wouldn't be as happy if it was a $24 loss though. So especially in a smaller account. The question overnight also was, what size account do you need to trade with? Again, that comes to personal preference. I hate being the one to advise on that because we have so many people who want to trade and their goal is $500 a day in profit. And that's fantastic to have that goal. I don't look at dollars as a goal. I look at percentage per day as my goal. The money takes care of itself because, as we mentioned in our startup video series, if money is your real goal, it becomes more of a demon because money's emotional and money's personal. So the answer to the question is loaded. Can you trade with $250 to $500 an account? Yeah, you can. The rules you got to be even tighter with the rules. And you make that $2 every so often. And so it's a slow grow. If I were to be trading that small account again, what I would do if I had to go back and do it again, because I did blow up my account a couple times. So if I had to go back and do it again, here's what I would do. I'd start with $250 in an account, and I would make it an objective of mine to add $25 every 2 weeks into the account, $50 a month. Make that a discipline in my trade plan that no matter what, I'm going to add $50 into my account, because really money makes money. And if you're really wanting to be serious about an income, you can't make an income with $500, not unless you take unnecessary risk. As I mentioned in past videos, I had a friend of mine get into Bitcoin before it became this big thing. And nothing against it. It's a high risk investment. Again, if you know the risk, it's just another investment. It doesn't matter what it is. It's no different than a penny stock, in my opinion. So he invested $2,000 in Bitcoin early on. He was excited about it. I didn't know anything about crypto at the time. He told me about it. I thought, that's dumb. You could barely make a house payment, but yet you're going to spend $2,000. I was wrong. He could make his house payment, but I didn't know that. And so he invested the $2,000 into Bitcoin. The very next morning, he calls me and said, hey, I doubled my money. It's actually at $23,000. And I thought, oh my gosh, he invested $2,000. He's sitting at $23,000, around that area, $20,000, somewhere in that area. And I thought, dude, and I immediately went to the charts. I didn't know anything about crypto, but it definitely moved, and he happened to hit it right. Now, he was not a trader. He'd call it luck. And so he was so excited. He says, I'm going to do the same thing again tomorrow. And I didn't think anything about it. I thought, fantastic. If I said that, my understanding is I'm going to take $2,000 again, and I'm going to dump it into Bitcoin. That's what, if I said I'm going to do that again, that's my trader mindset. I'm going to repeat the same thing over and over again. Oh, no, 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 no. He invested the full amount because he wanted to retire early. And he decided to invest because he thought, if I put the whole 23,000 in, then I should be around $200,000 by the end of the day. Little did he know he pretty much lost the entire thing. I think he walked away with about $300 in Bitcoin because he sold out, got scared, and only to see Bitcoin climb over the next 4 to 5 weeks to its all-time high. Although he was no longer in the market because he had $300, and that's what you don't want to do. So great stories of horror. So loaded question. Your account size should be the size that your family could afford to have in it and accept the risk without losing sleep over it. It should be an amount that your wife or your husband uh, fully understands and is not scared of it. It should be a number in your investing trading account that is a small portion of your net worth, not all of your net worth. So we will talk about maybe that in another video, is what is a good plan of a budget, because we've never talked real budgets here. Your investment and trading account are two different things. One's a trading account, one's an investing account. It's not your 401k, although you can have it in a 401k, but if you're self-directed, you need to be very, very careful with that. So percentages and knowing what a balanced, realistic portfolio looks like is what I used to do for a living. So maybe I need to create a video for that as well that might be helpful. We are now officially at the time of the ECB. So what I'm going to do, because we were worried about the euro connection to the pound, let's watch the pound US and see where our news is at. It's not giving me the clock like it did. So here we go. We're going to refresh our screen, maybe let it do its thing. We're at 7:15, so we're still 15 minutes ahead. I thought it was 7 o'clock time, so we still got 15 minutes. So we've got some things in our favor here. Current price structure is not in our favor here. However, we do have our moving average combination down here, ribbon that it's currently respecting. Our red line's coming down and pointing down. Our stop is above this nice little Sherlock area, which if you look back, that's a key spot right here. Always looking left. And we just wait. So what I'm going to do right now is I'm going to pause our recording and come back once things kind of get into a mode. Okay, so we'll pause it. It's at 7:01 right now. We'll come back when things start getting a little bit more interesting. All right, guys, we're back at 7:14. We're just moments away from the ECB Euro news that's coming out. And you notice we're almost making money on those two pairs that we talked about. We have had some structure change coming up. And again, I'm thinking that's mainly due to the news. Let's see what we got. We got 13 seconds on the news. They're forecasting 2.40. Let's see what happens. I'm going to refresh my screen. We're at the 5-second mark. And let's see if they actually met their forecast. It's pending. Let's see what's happening. Let's blow this one up bigger since it is more tied to the euro. And we're not seeing much on this one. Let's see what's happening on the euro pound, euro yen, euro US. And if you notice, there's not a whole lot happening. The spread didn't increase like it did yesterday. It's still sitting. There's no real spikes happening. Let's go to Euro US, since that seems, our Hercules is not freaking out. What does that mean? Well, look at our charts. We are sitting in limbo land still. The news wasn't so strange. We are seeing some movement to the upside for the euro. Again, the euro is sitting at 4. Notice our Hercules is actually, we don't pay attention to these very often. It's pointing down or sideways at this point, back to down again. So it's still, now we've got some numbers probably coming out because our numbers were pending. It came in as forecasted. So that's not going to have near as much of a impact normally as if it came under or above what's anticipated. I'd imagine this gives us a little bit of boost of strength, though. That 2.4 is much better than it was in the past. So we will move to our pound, and notice we're just kind of meandering away on this one. Still nothing crazy. Structure wise, we can see that our entry is still going to be kind of becoming our support. So we may not make this. It kind of shot up there. It's not into our zone yet. Still a decent trade. The US is still stronger than the pound. It's still at a 4. So we could be sitting here for a while. What I would love to do is sit down here instead of closer to our stop on this one. Looking at our CAD, US trade, we're going to blow that one up. Again, for this one, the structure looks much prettier. We've got room. We've got things coming into play that are supporting. You can see that the support line is our pivot low, and we're just kind of meandering. So not a whole lot of impact overall on our trade. So again, we can wait 15 minutes, see if structure kind of sets us up. If we get any sort of structure for a new trade, then we'll take it. However, per my rules, and I'm not going to break my rules even though this is a demo, I'm in 2 trades. I can't be in any more right now. One of them needs to get profitable and hit the 10 mark before I can ever consider another pair. So at this point, it's absolutely useless for me to be looking for a trade in another pair, and that's always depressing because you're going to always find one that you can't get into. Noticing the US CAD now is a 7-0, so we should, with the market becoming opening soon, we should see if this holds. We should start seeing this thing rise up and get us into a profitable position. Although we just had the US CAD move up to the 1 spot, so interesting to see which pair is 0. I'm guessing possibly Kiwi at this point. Or because it's not going to be the Aussie, it's not going to be the Euro, it's not the yen, it's not the pound, and it's not, yeah, it's got to be the Kiwi. So Kiwi went from a 7 to a 0. And I can look by looking at our numbers down here. So again, while we're sitting in 2 trades, can't do anything, can't do squat. I do like the structure currently happening on both the trades now. Both of them are respecting the structure that we identified initially. Nothing's changed. Both of them are still respecting their Hercules momentum. Nothing's changed. We just need one of them, or even both, to hit our 10 pip mark. And again, remember, our statistical average that we found doing a historical test is that about 60% of our trades hit our 10 pip mark when we get a true signal to do so. And so here we go. We just wait. And I'll keep the video running for about another 5 minutes, and then we're going to call this a day. And again, the YouTube channel will determine, again, your path, knowing that if you can't spend an hour or 2 in the mornings day trading, then this might not be for you. Scalping is even more difficult. Oh, look at there. We made some profit on the pound US. We're at 2 cents. Oh, there it went. 2 cents. There it's gone. We are just rolling in the dough. But that just confirms our structure, which was what we wanted. That may be the one that actually hits first, strangely enough. We'll see. Again, we're getting closer to the opening. Rolling in the bucks. Again, going back to our thoughts on account size. If you're sitting on a $5,000 account and you're trading 1%, this is a sizable income for your day. And if you're able to do that 3 out of your 5 trading days, and you do it consistently over several weeks, and then you do it consistently over months, you will be amazed at the end of the year annual return that you actually created. And in addition to that, as you grow your account, you change your position size based, not your percentage, but your involvement. So if you started with 5,000, you risked, let's just say you were risking 10% to make 1%, $50. And now your account is at 5,100. Now you're going to be risking 51. So you're also compounding on compounding. And then if you're the wise little squirrel and saving up for the winter, you take that account and you always add a little bit each month, whether that be $50, $100, depending on what your status is. And this is not your emergency savings account. This is not your normal savings account. This is not your 401 IRA. This is above and beyond those things. Your charitable giving, all that. This is above that. So you may not have hundreds of dollars to put into your account, but getting in a discipline of depositing every month, 2 weeks or every month based on how you get paid is a huge discipline to help you grow. And I would do that when I'm really trading real money. Putting money in an account for a demo, baking it in a demo doesn't really help you. Just do it for real money. And just like that, we were making cents on the dollar. And just like that, the market's taking it away. And nothing's changed though. Hercules is still showing strong now, 7-0. And I would imagine as we get closer, this one might start pushing us up to the mark we want to look. Let's do a quick look at our dollar, because that's really going to be the key here. I'm on a US CAD. Let's look at the dollar. The Dixie is what we call this. And notice we had this whipping back and forth on the Dixie. That is most likely going to be just volume trading. That's also could be a little tied to the ECB, but not really. We're right at a peak high. We're 3 hours in, we're at the peak high. Now we're closing it. Now we're probably going to see our US CAD also take off. Oh, I love this. Let's look at this here. Now we've got a buy signal, and we did, but we've got a rally base and a potential rally. This area could produce a new Sherlock area if this thing will close in the right spot. And that means that our stop would be in a fantastic area. So as we're getting closer, this is why I have a little bit of a problem trading more than one pair, because I can't do the math in my head. I got to go 2238 times I did it wrong, 0.25. I need to be able to remove 560 at this point. So what I'm going to do here is I'm going to add text. Remove 560. That reminds me of what it is when it touches. I might as well, whoa, okay, we need to do it over here. This is why it's fun. Let's go ahead and, wow, okay. I'm a little behind the game here. And I'm going to make more than I wanted to, which is always a bad problem. So 1675 times 0.25. I'm going to remove 419. So I'm going to right click, close position, partial. I'm going to put 419. We're going to be profitable here, and very profitable, by the way. And now I'm going to move my stop to the 7 pip mark. I'm going to get right here and then measure that. 7 pips with 51. And it's going to be real close to tapping me out. Our spread is still good. So I'm going to go right there for now to confirm it and then get it tighter. So again, we made our trade. We're probably going to get tapped out of this one, and that's okay. We made more profit than we thought we would because I wasn't paying attention as much as I should have been. That's a great lesson to be learned. And I guarantee Deb would agree. So we just got a Sentinel alert, which is after the ECB. It's a little too early to get in, but I'm going to go ahead and move that to the 51 because that's truly my 7 pips. And so here we go. And we just let it do. Now we have a chance to get into another trade if the structure's right. So let's minimize. We've got some time. The one we thought was going to hit 7.2, 7.2, 7.3. The one we thought was going to hit didn't hit first. Isn't that fantastic? We've got a Euro US on a breakout, but I'm looking right here. Our Hercules is not strong enough, and we're sitting inside of demand. So no, absolutely zero. The Aussie US, on the other hand, is a 5 spread, 6 spread. So let's take a look at this one quickly here. We had a breakout. We're a little late. I'm going to go ahead and put a sell order in 1%. I don't even know if I get in right now. That's going to be 99. That's going to be 69.99. I think that's close. Yeah, 69.99. I'm going to go ahead and put my sell order in. Not a great, particularly great stop area. But again, this is for education purposes to show you what the setup looks like. I'm going to go ahead and put my entry like this. It's a short, marking my 14. Move this over like so. I don't like a big green area. I'll make, ooh, that's not what I want. I'm going to move that out of the way. Confirm for now. And then do this. I'm not really on it. I want to be on my entry. And my bet is this could possibly go against me, but it's okay. Again, we're kind of broke our rules to get in a trade before the 7:30 hour. We're going to put this right at 14. There we go. With that at 14, we're going to move this to 17. No problem. No problem at all. And that's how we set it up. Now we just line our stops up. Find that top of that like so. Confirm it. Pull the top, the take profit here. And I'm not done yet. I'm going to confirm. What I want to do is definitely, I kind of like this look overall because our stop is above everything to the left, this noise here. So this is just retesting stuff. If we can just hold on to that 5. But what I definitely want to do is measure out to our 10. So we got in right here and we want to measure into the 10. So it's 69.74. So what I like to do is put that visual 69.74 right here. 69. Boy, that was a great guess. That was our 10-point move. So we're going to put 69.74 right there. And we watch. And if we happen to see it like we did the last time, we take it off. If we don't, we just let it ride. You can't go wrong there. So we're losing a little bit of money here. That's okay. Gaining a little bit of money here. Again, maximum trades we can be in is 2 at one time. That was mainly our best look, to be honest, for a trade because it was at the 5. It's at a 6 now. And this is a great time to be trading. We're at the 7:30 mark now. And we just wait. And we got so close on that US CAD, but we didn't touch it, so we can't do anything about it. But at that 30 mark, if this would just push up, we'd probably get a new Sherlock zone. But if that wicks like that is, it's not going to create a new zone. That's just going to be another basing candle. We just wait. I'm just going to let the Aussie US sit there and now Al will come in and he will set these all up and it'll do it automatically. When he gets back in town, I'll definitely have him show me how to do it. I'm not near as prolific on the trading view as he is. I just think this is still going to be a buyer's candle. I just think we're going to have a wick. We don't have any headwind really. Let's look at that's the 1 hour. Let's look at the 15-minute. Yeah, we got real close. Yeah, it looks really, really. Nah, 15 minutes. It's not going to give us a new Sherlock zone based on that candle. This one's still chewed up in there, but going to come back and test at the close of the minute. So it tells me we have some stuff. Let's look at our 4 hour. Nothing on the 4 hour. So again, this is just people, one of two things. We're set at a 7-2, so we got the momentum to our advantage. And we got the Aussie US just got into a trend sell, which we are already in. So we beat the signal. Isn't that fun? So let's go back over here. That does not mean that we're going to make money, but that sure does give me a nice little feeling inside that this move right here created a sentinel. Usually what we see is a pullback almost immediately, and that's okay. Now I am concerned about our stop here because it doesn't look like it's on top there. Let's go right there. There we go. I was going to say that didn't look right. Okay, there we go. And there it is. There's our pullback. A lot of times, especially in the current market, the Sentinel will give us a nice signal. Sentinel, remember, is mainly a breakout opportunity, but usually with breakouts, you have a repeat back and a pullback. So we just don't want this pullback to be too big. I don't anticipate it to be too big because the US dollar is strong and the euro just got weaker. So we just have to be patient now. So we've already cleared one trade. Okay, we've already cleared one trade. and it's still hanging. And oh, we got out of it. So we're completely out. So that was one of those trades. Let's show you what it did. That was one of those trades that hit our target, our 10-point pip really quick, one of those 60% that we were talking about. And then it retraced into our 7. Now, again, could we have left it alone and done the all or none? Yes, we could have. However, we want to, because day traders lose 93 to 95% of the time, we really want to get in a position of thinking about how can we protect capital, not about what ifs. What if we would have held longer? We didn't know what was going to happen. We really don't know. So it is better to have small wins, manage our risk levels, because as soon as we took that profit off, we moved our stop. So there's no risk at that point. And we would love to hit that 17, but it's going to have to get down into this area. And we don't know if that's going to happen. We just don't know. And the way the market is, it's sitting at a 4. We just don't know. So it's getting less guaranteed. There's a 5. We just don't know. And so again, we're not predicting. We're just using strategies to help us be more consistent. Let's go ahead and look at our US CAD. Our Aussie US is going to do what our Aussie US is going to do. It looks like it wants to move again based on that US dollar. This is what's causing this. The Dixie is being strong right now. Looking at the Dixie, there it is. You can see it's, here's our wick. This is a seller's candle. So there's something up here pushing it down, but this body is taking over the wick. If it can close like that, that's what we want. Okay, because that means that was just people, either their stops are getting taken out, they are taking profit one way or the other. So we're waiting for a number to hit. That number is 92. So we're going to watch that 87 turn to a 92. Because I think we can do it quickly, I'm going to go ahead and close the position, get it prepped. We're going to do a partial close of 560. And if it happens not to happen on this candle or two, then we will remove it and go look at the Aussie US. Little dime drops. Now, again, we didn't properly position size because I haven't, but if we were trading live, I would ensure that we were risking the 20, that would be $22 to make $28 or whatever, $29. Right now we're doing $2.30. So it should have been $23 to get $28 or something to that effect. And so it can be sizable even with a small account. It's talk $25 a day. You're talking about $100 a week, and you don't trade 52 weeks of the year. So just say you trade 40, that's $4,000. It all comes to long-term math thinking. I don't think it's going to do it on this candle. What news do we have coming up, please? Okay, that's what we got coming up at 7:30. We're already at 7:30. Let's see what happened here. We have nothing other than the press conference with the euro, and we're not involved in that. So, okay, this is a building permit that did not come in good. They haven't, or they're not forecasting very well. Even worse. Even worse. This is not far off. The PPI is not far off. This is really good PPI for the month to month. And maybe we do another lesson on what PPI is and these major news announcements, what they stand for, what it's actually talking about. Because a lot of people don't know what PPI, core PPI, and all that nonsense is. I'm writing notes down, by the way, guys. Unemployment a little higher than anticipated. We were previous at 225. They were forecasting better, and then it actually got worse. And that's probably why we didn't blast off either. So again, we've got just a few minutes before we hit that. We could hit that mark. So I'm gonna go ahead and close this one down. Go check our Aussie because that was kind of flying. It's moving pretty good too. So we'll just kind of keep an eye on things. So we're really looking to get around the $1.75 mark here. I would assume this will be about $3 to $4 ish. And we just wait. I'd love for that candle to create there, because that just, I want to get past that pivot high there. That's not been identified yet. So I'm gonna let the video go for another 5 minutes, and then we will shut it down, because I never want our videos to be super long. The attention span of a grown adult, is anywhere from 20 minutes to 45 minutes. And what I mean by that attention span, focused attention span. Very difficult to be focused for more than 40 minutes. And so that's why we like to pause from time to time. I do want you to look at the Euro US. We had that sell signal. Notice we had the pullback, and we have the same kind of opposite look as we have on the US CAD. We have it to the downside, but we're sitting inside a demand. Again, on the US CAD, don't confuse this green area as a Sherlock zone. That is not a Sherlock zone. That is our predictor area. So let me do something here, if I can make that, just if it lets me, make it just a little clearer for you guys. I'm going to move this like this and squash it like that. And I got in on that candle like that. There we go. That way we know what we're looking at. It is not a Sherlock. And now my stop looks very, very, in one of the videos we talk about, when do you know you're wrong? I know I'm wrong when my stop gets taken out at this point. Definitely at this point. So again, we're sitting at a 7-2. That's a 5 spread. Sitting at a 7-1. That's a good spread there. And then the other ones are just kind of flat. We've got a 2, a 1, a 2, a 3, a 4, which we were in before. And notice it's sitting there. So it's sitting right at that 10-point line. So yeah, we got out a little early, but we may have saved ourselves from a full percentage loss, because this could be bouncing back up. You never know. I don't anticipate that, but it just tells me that there's not as much volume on that US dollar quite yet. And it's a Thursday. Usually Thursdays are pretty good days. We've got some news at 7:45. That conference right there may wreak some havoc on our euro pairs. It could impact everybody. After that, pretty light sailing. What do we have for tomorrow? Early morning stuff. Nothing really crazy. Nothing really crazy. And my mind is not wandering. Let me get that closed. Again, go to a YouTube channel. But I'm even getting a little bit tired. I've been here since about 3:30, 4 o'clock. So been a busy, busy day. Now, you in your own personal trade plan, as you go and you build your trade plan, let's say you're at the 8:30 hour at your location, or the 9:30 hour, wherever you may be, and you know that you can no longer stand here or sit here and watch this, and maybe you're not comfortable managing it on an iPad or a phone. That's perfectly fine. If your rules state that if you walk away, close the position, then walk away, close the position. The way we've set up Hawkeye for us, for Al and I, is that we accept the loss right away. Now, for me, I can walk away. Al at this time would be saying, okay, I am going to either do one of two things. He's going to either move his stop down to a tighter to take less of a loss and risk the fact that he could get tapped out earlier, or he's going to close his position altogether and just walk away. And neither one of those are wrong. Just know if you move your stop, it needs to be for a reason. And if you move it once, you don't ever move it back. So for instance, you're going to leave for an hour. You moved your stop, you come back in an hour and the price is still in the same identical place. You don't move your stop back to the original spot. You have to make disciplined decisions on what you want to do. Now notice our 7-1 now for the Aussie US 7-1. It's gotten a little larger, but we're going nowhere. It's kind of limbo. That means we've got some buyers that are pressuring this point. We've got some stops that are holding it, or targets that are holding it, and we're just waiting for the push. Who's going to win on the Aussie US? Is it going to be the sellers, or is it going to be the buyers? And this is telling us the sellers have the momentum. The sellers have the strength, but the buyers are just fighting. That's all that's happening right now. That means you have some orders sitting there. It's all about order flow. There's not actual human beings fighting each other. There's no computers fighting. You have algorithms looking at what's happening right now and making decisions based on patterns and sequences. Some of our tools are doing something similar, patterns and sequences, but we are not giving an immediate feedback. Our tools look for the structure piece. So we're not making any sort of adjustment to our stops based on a pattern or a sequence that an algorithm is looking for to get in or to get out. And this is the draining part. This is where we sit and we can tell jokes. But remember, from 5 o'clock on to about 15-20 minutes ago, we never saw green at all. We were in the red the whole entire time, and it is what it is. So, and then we waited for the news, and we do what the news does. So let me see where we're at. We're at the US yen. Let's look at our dollar. Our dollar is having a struggle. And it doesn't surprise, because look left, go to your daily chart, see what the struggle is. And this is why we pay attention. We're just coming right back up to the supply. Do I think we will win out for the day? I think we'll have a buyer's candle for the day. I don't necessarily know if we'll win the day as far as moving higher up to this area, but I think we're going to have a buyer's candle for the day. Let's look at our gold. We should see a shrinkage, and we do see a shrinkage, kind of the same picture, but flipped. We have this light demand area here. I think we're going to have a seller's candle for the day. We had a seller's candle for the day yesterday. But at some point, I think we're going to stop. So if you're a wealth builder, this might be the point. If you love gold, I think there's things that are a little bit more efficient that you can use, like silver, still expensive, copper. Those are, to me, better right now because gold is so overpriced. Not overpriced, but its cost is high right now, and a lot of people just don't have $4,000 to throw down on an ounce of gold. So I think we're going to have a seller's day today. We'll see. We are at critical points, as we mentioned earlier today. Those are all running up against critical pieces. Notice that the US yen, safe haven currencies, are the strongest ones. I say traditionally safe haven currencies are the strongest ones. The yen has not been playing nice. Lots of turmoil with the yen. And so we're at 7.2, 7.1, and we're going the wrong way. And that's just the way it goes. We just have to be patient. So with that, it is now 7:45. I don't want to belabor. I will give you guys an update tomorrow morning, 7 o'clock in the morning. We'll meet again. If you have any questions, definitely let us know. Thank you for being here for Hawkeye Morning Trade Lab. We hope it's been beneficial to you guys. And definitely send some questions in the YouTube channel. Make your post, subscribe, like the video. Definitely ask questions. And if there's anything we can do to help you along your trading path, definitely let us know. God bless everybody. Take care.